Muy buenas, pues es un placer para Negocios Televisión poder estar con uno de los grandes paradigmas de la economía, una de las principales personas que nos pueden dar detalles sobre cómo está funcionando los mercados en estos momentos tan complicados y sobre todo en una de las partes fundamentales mirando geográficamente a la inversión, como son los mercados emergentes. Hoy nos acompaña el padre de la inversión de los mercados emergentes, más de 40 años invirtiendo en ellos. Fue presidente ejecutivo de la filial de Templeton Emerging Markets Groups. En Franklin Templeton llegó a gestionar más de 55 billones de dólares y en esos activos emergentes también ha sido consultor del equipo de consultoría del sector privado del Banco Mundial. Hoy nos acompaña Marc Mobius, es el socio fundador de Mobius Capital Partners. Thank you very much for having this time with us.
Thank you, pleasure.
It's a pleasure for us. Emerging markets are in a very interesting moment. If we see the last year becoming the first to foresee take advantage of raise and interest rates to fight the inflation, how are they affected by the economic slowdown, inflation, dollar, looking ahead to the second semester of the year?
Well, there are many things that are happening in emerging markets now. First of all, the US dollar, as you know, has gotten much stronger. So a lot of the emerging market currencies, including the developed market currencies, the euro has gotten weaker against the US dollar. That's number one. But we are not so afraid of that because very often a weak currency can help you. For example, in Turkey, which has a very weak currency, we have a company that exports software. So this company is earning dollars, but their costs are in the weak Turkish lira. So currency can be a friend as well as a foe, if you know what I mean. The other thing about emerging markets today is that many people are looking at the index. Now, what is the index? The index is components of the major emerging market countries. China represents 30% of the index, and China has gone down dramatically and has pulled down the emerging markets index. So you should not pay so much attention to the index, but to individual countries. For example, in our portfolio, Taiwan is the largest segment, which is why we have been able to outperform emerging markets generally, the index in general. The other thing I think to remember is that, and the wonderful thing about emerging markets is that it's such a variety. Even in Latin America, Brazil is different from Chile. Chile is different from Mexico. And then throughout emerging markets, South Africa is different from Turkey. Turkey is different from Taiwan. Taiwan is different from Vietnam. So we have an incredible, how can I say, menu of many, many dishes that we can choose from.
It could have been a very good performance if we compare with the rest of the world in this 2022 in the second semester.
Yes, the performance of emerging markets generally has been bad. If you look at the index, again, people are looking at the index because China has dragged down the index. Therefore, if you look at the MSCI Emerging Markets Index, it's less than the S&P 500. However, if you look at NASDAQ, the NASDAQ has gone as much down as the emerging markets. So it depends on which index you're looking at. But if you look at individual companies and countries, the situation is very different. Some countries have done quite well in this environment.
You are talking about Taiwan and part of the Asian sector, Asian countries could be part of the new stimulus about the tech companies?
That's right. Tech is very, very important in Asia generally, but globally. We do not invest in companies unless we know that they are very well versed in technology and are using technology, because technology is affecting everyone, not only tech companies, but consumer companies. For example, if you look at Amazon, Amazon could not function the way it functions today without technology. So we look at technology very carefully. And one of the reasons why we have so much in Taiwan is that Taiwanese companies are very well run, very profitable, but they're also very good in software technology, the technology that goes into the semiconductors. Because today, semiconductors are used on almost every product around the world. And interestingly enough, a lot of people think that semiconductors, the biggest use is in cell phones or computers. No, the biggest use now is automobiles. So the use of semiconductors is growing very rapidly.
It's a year for Brazil. You are talking so minutes ago. Brazil is a very good year for all the surrounding. Could be this the best year for Brazil inside these emerging markets?
It could be. Carlos Hardenberg, which you'll be talking to later, just returned from Brazil, and he found that things were very, very good there. It's a very good economy now. And of course, interest rates have gone up ahead of the U.S., so in some ways the Brazilian government has been much more prudent in the way they handle inflation, because of course Brazil has had a big history of inflation, but there are excellent companies in Brazil, and we believe Brazil will do quite well this year.
MENA countries seems to be underrepresented in the fund. Would you say it's still worth investing in our countries considering the extraordinary revenues they get for oil?
Well, of course, oil is so important in these countries, and Saudi Arabia is the biggest market in the MENA region, but mainly it's an oil-based economy, and the biggest company is the Saudi Arabian American Oil Company. But what I found is that in the Middle East, more and more people are beginning to look at Dubai and are beginning to realize that the way to go is not to depend on oil, but to depend on tourism, depend on commerce, depend on finance, and many other areas. That's the reason why the Dubai market is growing, and UAE, United Arab Emirates, of which Dubai is a part, is growing very rapidly now.
Oil could be one of the most important things for emerging market this 2022?
Oil, of course, is a big factor globally. I mean, if you look at the U.S., one of the reasons why if he loses the election, it will be because of the price of gasoline. Because Americans look at how much they're spending at the pump to buy gasoline, and it takes a big part of their budget. So this will have a big impact going forward. If it continues, of course, inflation will continue at a high level.
How important is sustainability things, ESG, for emerging markets?
Well, we look at ESG, by the way, we've added C. So we say ESG plus C. C is the culture of the company. So we look at the environmental, social, and governance factors as a way to limit risk. So we don't think of it as something to do good for mankind, but a way for us to limit the risk of a company. So if a company is polluting, if they're not having good relations with the community, if they have bad corporate governance, and if the culture within the company is not good, then there's a risk. There's a kind of risk we don't want. Now, of course, if we're able to get improvements in companies, and of course we work with companies to help them improve, it can be good for society as a whole. But our main focus is on risk.
We learn about this in Evergrande. Maybe in China, if you put out of your portfolio Evergrande for these ESG factors, could be better, no?
Yes, to some extent, but you must remember that we are focusing on companies. So even within China, which has gone down dramatically, we own some Chinese companies that are doing quite well in this environment. And also, you must remember that we don't focus on the price of the stock. We focus on the quality of the company, the growth in earnings, the strength of the balance sheet, the capability of the management, because we believe that regardless of where the price is, if you invest in a good company over the long term, you'll do very well.
How is inflation in emerging markets? Because we have China with less problems about this central bank, but India has a lot of problems, and they said that part of the grain is not out of India. How is inflation in the context of emerging markets now?
Well, generally speaking, globally, inflation is going up simply because of the price of oil, price of fuel has gone up, and that affects everybody. Whether it's be India, China, Japan, wherever you are, it will affect people. But you must remember that there are also winners and losers. because let's take Ukraine and Russia. The war actually has been beneficial for India because India is now able to import Russian oil at a lower price, because the Russians are eager to trade with India now because they have embargoes for other countries. So it will depend on what situation you're in. But generally speaking, we can see inflation growing in all these countries.
Talking about the war, China, Russia, Iran, Venezuela, how this affect investment in emerging markets, because all of them are so close to Russia and in front of United States, maybe less from China, but it's so close to Russia.
Yeah, well, there's some, of course, East European countries that are, have problems with Russia and they're very afraid. But we've done a lot of studies about the effect of the market on war, the war effect on the markets. And we found that if you look at World War I, World War II, Korean War, Vietnam War, stock markets went up. So the war is not necessarily bad for stock markets, let's put it that way.
What are the key things you consider when selecting countries and sectors for Mobius emerging markets?
Well, what we look at very, very carefully, of course, is the individual managements of the companies. Of course, we look at the macro situation because the macro situation can impact the management of the company and the company in general, but we focus more on the management to begin with, because if we have a good management, they often can surmount all of these other challenges, whether it be government challenges, whether it be environmental challenges, whatever the other challenges may be. So very important to focus on the company in the context of the macro environment.
What's your opinion about for an investor that this year has a lot of losses? What do you think? What the best counsel you could do for this investor?
First thing I think is to get out of cash. I know a lot of people think, oh, I want to be safe, I want to keep cash. But that's quite dangerous because with cash you're not getting a good rate of interest. And if you're thinking of going into fixed income instruments such as bonds, it could be a big mistake, because let's say the bond is now offering 3% interest in dollar terms, which looks very attractive, but interest rates may go up to 8 or 9%. So you could be losing quite a lot. So we feel that it's not a good idea to be holding too much cash, but to be investing in good companies at this stage, because prices are down. Of course, the prices go down lower, but that doesn't make any difference. At the end of the day, if you have a good company, over the longer term, it will do very well.
Government and corporate bonds could be an option for investors now in emerging markets?
No, I don't think it's a good idea to get into bonds because of the interest rate environment. No one knows how high the interest rates will go. And if you look at the history, you'll see that central banks, in order to fight inflation, have mistakenly, in my view, raised interest rates too high. And normally they want to raise the interest rate higher than the inflation rate. So the CPI in America is 8.5%. That means they have to go to 9%. So recently when they announced a 0.75% increase, everybody was excited. It's nothing. It's a very small amount. It will go much, much higher. So it's very dangerous to be investing in fixed income instruments right now, even if they're adjustable. Because very often the adjustable interest rate instruments have a ceiling. I was recently offered a bond which had adjustable interest rate with a ceiling of 3%. Too dangerous, because the interest rates could go up to 5, 6, 7, 8% or more.
Only one question. What do you think about central banks in all this moment to understand that inflation is punctual?
Inflation banks should be eliminated, in my view, because they create all this problem. You know, the central banks are the ones that created this inflation. Well, what is inflation? Inflation is the devaluation of money. If you print too much money, of course, the currency, the money will lose its value. And that's exactly what happened during COVID. They printed and printed and printed, and now we have this situation. Now they want to correct the situation, and it's a big mess. It's a big problem for people around the world.
Could be easy in the short or medium term to resolve the situation for central banks, Federal Reserve and other central banks?
Well, I think the central banks will try to resolve it, but the central banks, particularly the U.S. Central Bank, as you know, has been very, very slow and in reacting to the situation. And therefore, I believe that it will take a little more time for this to take place. But again, let me emphasize, if you're in the stock market, interest rates are not going to affect it over the long term. If you look at the history of interest rates and the stock market, you'll see that the impact has not been that great. Even at times when interest rates were high, the stock market continued to rise. Why? Because companies can adjust their prices to the rise of inflation. So if you have a good company that has pricing power, that's the best way to escape inflation.
It's a major problem for tech companies?
Well, tech companies, depending on which one. Tech companies nowadays, generally speaking, have the ability to raise their prices in line with inflation. But some tech companies do not have that. You've got to look at that carefully to see. For example, let's take cell phones. Now, iPhones, Apple has a particularly good position in the market, but they're also competing with Huawei and others that are lower prices. So there's competition in that direction. But the interesting aspect to this is that the iPhone and Apple are being improved. They're adding new technical features which enables them to raise their price. But generally speaking, there is price pressure there.
Thank you very much, Dr. Marc Mobius, Socio Fundador de Mobius Capital Partners. Thank you very much for having this time with us in Madrid, and for all speaking Spanish investors that could see from United States and another part of Latin America and emerging markets for this moment. Thank you very much.
Thank you. Pleasure.
Esta es la visión que hemos tenido con una de las figuras principales a nivel internacional para entender top de cómo el mercado ahora mismo está entendiendo lo que está pasando, bancos centrales, pero sobre todo con la mirada puesta de los mercados emergentes que ya el año pasado sorprendieron al mercado y que este año están en el punto de mira, sobre todo con la mirada puesta en China.